Well, folks, it's that time in the big skinny history where for the second time, we're checking in on what's cooking with Kenny Polcari, Chief Market Strategist at Slatestone Wealth. Let's see if we got him belly rolling, laughing with that image like we did the first time. Success!
You
We
are out of
win!
your
I'm not out of my mind. I'm not out of my mind. Listen, my friend, it is always a pleasure to have you join the show. It's always a pleasure when I see you on the airwaves on Fox Business as well. But I wanted to check in and just take your temperature, man. My feeling is that everyone is freaking out about the market hitting all-time highs, about big tech taking up so much of the S&P 500. Wow, wow, wow. Cry me a river. Are you scared about this? Am I an idiot for being so nonchalant?
No, I'm not scared about it. I'm not afraid of it. The position I'm at is let's just slow down. I think it's extended. I think it's due for a pullback, which doesn't mean you can't take money and allocate it to other parts of the market that have not been outperforming, right? So I'm not afraid of it. I buy more on a pullback, but I'm certainly not chasing it up here.
So, I mean, I think this is important perspective too, because you were on the floor as a market maker,
Yeah.
trader. I mean, through probably some of the most historic ups and downs in the market. I mean,
Yeah.
does this smell anything like it did to you during the dot-com days, right? Because everyone's making a
No,
big stink about
no, no.
prices and valuations, but is anything similar to you?
No, it's not because you have to remember during the dot com bubble, those companies that had .com in their name had no earnings, they had no history, they had no nothing. It was just about the excitement. The internet was going to change the world, and all these companies put .com after their name, and suddenly their valuations exploded because people just got so caught up in the like the FOMO trade. Oh my God, I have to get it, I have to get it. And so
Yeah.
this is nothing like that. These companies that are taking us to new heights are real businesses with real earnings and real history and real margins, and it's Palantir, it's Nvidia, it's AMD, it's all the big names, right? It's Apple, it's Amazon, all really solid mega cap names with history that's taking us too high. It is completely different than what it was in 1999.
I completely agree. So I'm glad to hear that validation from you as someone that was on the floor and probably felt the pandemonium probably more than anyone else. As you look at it though, so where are you finding opportunities in this market, right? You said you feel like it's overstretched. So where does that lead you to, if you're putting new money to work, what's really compelling right now?
So it's the areas that have been clearly underperforming and that are selling off their highs. So if you look at financials, those are off their highs. You look at energy, off its highs. Consumer staples, boring, yes, but they're off their highs. And if the market gets a little bit anxious,
Wait, come on, dude. You're
consumer
not
staples where you want
consumer
to be.
staples. Consumer
Consumer
staples is like a
staples,
def.
Procter and
Yeah.
Gamble, 100%. Procter and Gamble, big boring names like that. They're good dividend payers. And in a down market, if you're worried about the market really getting crushed, remember, you still need to go out and buy toothpaste and soap and toilet paper. That's what consumer
I've
staples is, right?
yeah, but that's like so
I'm not
defensive.
necessarily saying that you allocate a big portion, but you're asking me where I'm finding opportunity. Also, clearly in healthcare, look what happened in healthcare, not just the UNH thing that
Yeah.
ignited this massive rally in UNH on Friday and took the whole sector with it. But if you look at names like Merck was down 20% year to date, right? It was building a base there at 80. It paid you a 4% dividend, and it's been way underperforming not only the market, it's been underperforming its sector as well. It's a name that we
Yeah.
own. It's a big mega cap name in the space. It's a name that I like. So those are the places. Now, listen, don't go poo
I
pooing
can
me
get
on
I can
consumer
get
staples.
I
I
can
get it. They're not sexy. I get it.
yeah. No, look, I
But
can get
I
behind the
think there's a
healthcare.
place if you're anxious about the market, I think there's a place for consumer staples.
Yeah, no, look, I mean, I just didn't pick you as the guy that was gonna pick, diapers and toilet
Oh,
paper and
but
canned goods,
remember, But remember
uh,
my role as a wealth advisor, I have to think
I do.
about the total picture for these clients. I got to think about building portfolios that can weather the storm. Now, I'm not necessarily running right out for myself, but when you talk about building a portfolio and having a well balanced and diverse portfolio, you have to consider allocating some of it to consumer staples.
No, and I agree. Look, I just am surprised a little bit because you saw Staples really rally the sector as a whole earlier in the year. Obviously, when we had concerns, then we had the tariff tantrum sell off. You saw good
Correct.
performance and a rotation out of it. So I'm not poo-pooing that. I think in a holistic portfolio, you got to have exposure. It's definitely out of favor and creating opportunities and stabilize has a stabilizing effect. I think for me, I'm more opportunistic, so I love hearing you get bullish on Merck, a name that I think has one of the
Yep.
top selling, if not the top selling drug ever made. Again, Keytruda, you're seeing that they have plenty of stuff in the pipeline that can justify a lot more growth. So,
Right.
what do you
And
think
it's
in the
been,
end? And
it's been getting killed, right? It's down 20%.
yeah,
The sector was down before this recent rally. The sector was down about 8%. That was down 20%, way underperforming even the broader market, right? The S&P is up 9.6% as of tonight, right? The Nasdaq
yeah. So
12%.
here's here's the last question. It's two-parter, right? I'm no longer in the camp that the Fed shouldn't cut. You and I both were in there. Are you still in the camp that Powell should hold rates, where they
Well,
are? And if he cuts them, what does that mean? Like where the opportunities materialize because of that? Is it financials that's the biggest beneficiary? Where are we at?
okay, so it's funny because you know me, I was in the camp that they shouldn't cut. I think by holding rates here, they're going to put pressure on housing, and you're actually starting to see housing in parts of the country really start to pull back in, which is actually a positive thing because you got to have some retreat in housing prices. If they start cutting rates, and look, a 25 basis point cut is not going to send mortgages down from 7% to 5%. That's not going to happen.
Agree. Agree.
So that's okay. But I do think now after the PPI report, which was much harder than expected. It wasn't a tenth of a percent greater. It was 7/10 of a percent greater. I think it goes to Powell's point is that these producers have been kind of eating those higher prices, just waiting to see where the markets, where this whole tariff thing is going to end up and when they should start passing it on. So I think he's been right in dragging his feet and being slow. Now that being said, you got kind of a slowdown in the labor market, so it's a tightrope that he has to walk. Is he going to pay more attention to the labor market, or is he going to pay more attention to inflation? I think 2% is now 3%. I think that's going to be the
Yeah.
level that they're going to accept as a level of inflation. And if that's the case, then a 25 basis point cut by the Fed in September, I don't think is unreasonable. And I think instead of what I thought was it then going to be 100 basis points between September and December, because I thought there was going to be 50 in September and then 25 and 25, I think that's off the table. I think they're lucky if they get 50, 125 in September and the other 25 in December, and they'll give October and November a chance to kind of regroup to see
Yeah.
what happens.
So I completely agree with you. We both changed our mind on that based upon the data. I guess my fear is that Powell is not as just in time perfect cook like you are, and he's going to leave the pasta in the pot for too long, and it's not going to come out al
Yeah, then
dente.
it gets
It's going to come out
mushy.
overcooked.
Ugh, gets
Yeah,
mushy.
yeah. So we got a question here from Chad Towers. If and when we cut housing financials, but how about oil field services, Halliburton, any other names that you like in oil on an
Those
interest rate
are,
cut?
I like energy, so I like oil field services. I like anything in the energy sector, especially look at, let's not kid ourselves. I like what's going on in the nuclear space, right? So names like NuScale, some Duke Energy, a lot of these utility companies that are now jumping on that small nuclear reactor wave, right? And you can see it. Look at utilities up there, up 12.5% this year, the most boring sector in the world. And it's one of the
Yeah.
outperformers, clearly because of the demand on energy. So, yes, anything in the energy space, in the oil sector and services, I certainly like. Schlumberger is a perfect example of a name that I like. We own it. I like it. And I think, big names. Exxon, Chevron are big mega cap names in the space. It's a good place to hide out. They pay a decent dividend. You're not going to get whacked in those names because they're so big and liquid.
Well, listen, man, I always appreciate your insights, and I appreciate more than anything your candor, right? You're like me. We got to be able to change our mind when the markets change on us. So I love that. I look forward to the next time we talk and see what else has changed and figure out what's cooking with Kenny. Next time I want you to bring a recipe, my friend. Yeah, a good cannoli recipe, maybe. So
Listen,
always good
I'm happy to bring you a recipe whenever you want it.
to all right. My
All right.
friend, it is always a pleasure to see you. Look forward to seeing you again soon.
See you. Bye bye.